Hello, people of about the profitable investor here. So I want to teach you something. I want to teach you on stop loss, take profit, risk rewards ratio, and understanding lot sizes in a better way. I notice that many of you have difficulty in understanding this, so I want you to understand and please pay attention. Okay, for this video, I will be concentrating on using risk to reward ratio for accounts between $10 and $100. So this video shall be strictly on the fact that I assume you are starting your trading career with the lowest possible $10. Now, depending on your analysis, you want to place order. You can do that in two forms. You can do what is called market execution, or you can do a pending order. Pending order at what you see here. The meaning is you think price will get to a level so you can program it right immediately. The advantage of this, of all this, is that you are going to be able to conveniently set up your take profit and stop loss easily without issues. But for market execution, that means you first of all enter the market and then you will modify the order and then you will enter your take profit and stop loss variables. So let me give an example. Now let's imagine I'm buying, okay, buy, and I want to place 1:3 reward system. I assume that I have $10 in my account. Forget about this. I assume I have $10 in my account and I'm willing to risk $1 for every trade. If that $1 comes very well, I would make a profit of $3 provided market goes in direction of our expected end. Okay, so what I will do is this. I'll click on this and I'll hold. I'll click on modify. Now, if you look at this closely, please, look at this level. You will see the price level called 428,360.31. So I am buying. So I'm buying means I want price to go up. Now, if I want to take a place profit 1:3, mind you, I'm willing to risk $1 in this trade to make $3 if it goes well. I will add 3,000 points to this figure up here. Now, for my stop loss, the meaning is if price goes against me, I'm willing to risk or lose the maximum of $1. And I can do that. I'm just willing to risk $1 for this trade. So what will I do? 428,360.31 minus 1,000. What's that? 427,360.3. Then you click on modify. Then you check your chart. You see now. So look at this closely. If price is currently at this level, if it comes down and it hits this level, look at this now. If price hits this level, I'm off of the market. I've lost. If it comes up and it hits this, the meaning is I'm going to make $3 and the market will close automatically. That is for a buy if it goes in the direction of our prediction of a buy. Now let me do for a sell opportunity. I want to enter immediately. So let me say sell price. Now, where is price? Okay. You will do this. You will click the middle point of that recent trade. So just click on it and hold and click on modify. Or you can just drag it from the right to the left like this and click on the middle. You see now. So I want to modify. Now, where is price? Price is currently at 4. So I want to calculate it right now. 428,323.10. I want price to come down so that I can make profit. So your take profit is going to be in a 1:3 reward system. It's going to be This price above minus 3,000 points, minus 30,005,323.1, since I'm traded in selling. And my stop loss now, that is if it goes against me, is going to be plus 1,000. All right. So add 1,000 to that, which is going to be 429,323.1. Modify. That's done. So if it goes in any direction, it can execute you. It can take you off the market. Either it goes in the loss direction or the profit direction. This kind of format is called 1:3. Okay, people. So let me just give you a few hints as to managing your account and using risk to reward ratio very well. So the first thing you need to understand is lot sizes. Okay, basically a lot size is the small unit of your currency for trading. So that means that for small account holders, that is, if you have between $10 to $100, you can trade and be profitable. Now, let me now give you an example. Let's imagine you are buying. Let's imagine market is on a buying trend, or let's say you are even buying now. If you are starting with $100, okay, put it at your mind that the maximum you want to lose is $20, which is 20% of your account. Now, that doesn't mean just enter a trade and wait until you blow $20. No, you will break it down. And this is where your mastery has to play. For example, if you take $20, if you break it down into units, okay? Let's say you want to have 20 trades. Let's say you want to take 2 trades on a daily basis. After mastering your entries, okay, what you need to do is this. Break $20 into 20 places. That's going to be $1. Okay, so per day, your risk tolerance afford you to lose $2 maximum. In that kind of situation, you will come to your chart. You will click on a market execution. That is if you want to enter immediately. Okay, I'm using market execution as an example. Then you will place your order. Now, it means that once you place your order, you have to modify that order. For example, I have an order that is going on. I can decide to modify. And how do I do that? I'll click on this pencil icon. Then I would modify the order. I'll click whatever the variable. In this situation, as soon as you enter, click on market execution, the next thing you do is you make sure you adjust and set up your take profit and stop losses. Now, so you are willing to lose $1 for that single trade. If it's a buy trade, like I said, you would add you had 3,000 points. You just add 3,000. That is, you add 3,000 to your current price. Okay, and you will now include that final price to your take profit level. So secondly, you will subtract 1,000 from your current price and put it on the sell loss, stop loss, and click on done, and you modify. Okay, so in that kind of situation with a lot size of 0.01, if market goes in your favor, you can decide to do two things, any of these two things. As soon as you are profitable, okay, let's say your target is $3, which is 3,000 points. Once you see that market goes in 50% of your favor, that is, you are now in $1.50 profit, you can just wait a bit and trail your profit. There's a video I did on trailing profit. You can just search it on the YouTube channel and set your stop loss into 50% of that market. Or let me say this, as soon as you notice that your expectation has been met about 50%, and you are still expecting that hopefully it will go to $3 mark and you are done. Once your price hits 60% of your expectation, if you are monitoring your trade, this is for trade monitoring. Okay, now set your stop loss to 1,500 points, which is 50% of 3,000 points. Now, this is to ensure that even if market reverses, you won't lose. That is case one. On the alternative, if you don't want to place the trade and just leave, you can just leave it alone. Okay. Sometimes market will hit your take profit. Sometimes markets may almost hit your take profit before reversing and can lead you into a loss. But the maximum you can lose in this situation is $1. All right. So that is case one. So in that situation, for a $1 risk tolerance level, if you trade twice in a day, that means for you to exhaust that $20, if you lose all, that is, let's imagine you enter the market and you see it is favorable and you entered, okay, you can only do 2 times in a day. Okay, I mean, if you are being compliant with the rules, all right. So you take 2 trades on a daily basis, you are done. Whether you make it, fine, or you lose, you learn. The day two, you can do this for 10 days. You can blow $20 in 10 days, but with intentional practice and nice entries, you should still be able to make your money as long as you are right. Okay. Now, but in a situation whereby you want to have 10 trades and you want to reach $2, now in that situation, your stop loss is going to be 2,000 points, because 2,000 points times 0.001 is $2, while your take profit is going to be 6,000 points, which will give you $6. Now, if you plan to enter with 5 trades, all right, that is, you want to blow $20 with 5 trades. Now, it means that you will ensure that your risk level is $4. That is, your stop loss is 4,000 points, whereby your take profit is 12,000 points. In that case, if you hit your target, you would have $12 for every success. Now, the truth is this: I would not advise you to do that on a live account for now. Only after you might have mastered the strategy very well. And how do you know you have mastered the strategy? If you have traded and you have entered correctly, and you have monitored your trade with a trading plan, and you have done at least 100 trades. Now, I'm not talking about now trade 50 trade take 50 positions per day. No, I'm talking about consistently, maybe twice in a day, maybe 3 times in a day. It's okay. Take your trades, document them out, how your trade has been performing, when did you lose, which buying position. It is a report card of your trading history. Now, so if you are able to have about 100 trades, let's say within a period of 30 days, okay, and you have 65% success, you are good to go live. You may just wish to test this on your demo, okay. You may just enter you may just enter the market and just set up your take profit, stop loss, and just leave the market. Now, if you win, that is, if you are successful 5 out of 10 times, you will always be profitable with 1:3 reward system, risk reward ratio. Okay, let's imagine you are with this same $20 account. Okay, let's say you set up $20 account, all right, and then you want to blow it up within 10 days. Okay, that means maximum loss per day $2. That means if you lose all through, you will lose in you blow off that $20 in 10 days. Now, this is what you do. Now, $2. Let's imagine you enter, you set your take profit and stop loss, and you exit and you leave your trade. You just leave it to run on its own. without you trailing your profits. You just want to leave your trade and just do other things. Now, in that situation, let's imagine you win 5 times. Now, your risk level is $20 in total. Okay? If you lose all your trades, that means you have 20 times 0, which is 0. Now, if you win 5 out of 10, so it's going to be, your money is going to be 5 times, okay, 1 to ratio 3, which is going to be 6, because you are risking 2 to get 6. So 5 times 6, all right? So 5 times 6 is going to be 30. So you have made $30 profit. Mind you, your risk capital, let me use that word, was $20. And you lost 5 trades. So your losses is equal to 2 times 5, that's 10. So from your original capital of $20, you have $10 left. Now your $10 left plus your profit you made after trading plus 30, so you have $40. So actually you reached $20, and in whole you got $40. Do you understand? So this is how it works, guys. Thank you.